Perfect. There we are. You too, Trader War. You too. Thank you. Thank you. Thank you. All right. So, what are we seeing on the dollar? That's the first question that I want to ask, and I'm a little bit surprised, to be honest, that we see this right here. The retracement back all the way into the fair value area. So this right here is the current fair value area that we have right there. We saw that we got a 2 candle rejection right there already. So that happened at this moment in time. This is the first candle rejecting right now. Now this candle rejecting is rejecting into a fair value gap to continue lower off of and following through. So if anything, currently the shorts on the dollar look more interesting than the longs. But do we all of a sudden want to look for shorts right now and target the fair value area low, which is, let me remove those things, which is this low right there. And then potentially we can target this weekly fair value gap right there as well. Is that interesting? Well, to me, that's not really interesting because we've been going higher for some time right there. So all of a sudden trying to call a top, whilst I could still very well see the logic that we still want to continue higher as well. Don't really see a reason as to why price is stopping right here. So those things don't really add up in my opinion. So we could of course also consolidate. That is what we have to take into account. The retracements are getting deeper and deeper and it is not looking very good. A bit of a shame, to be honest, because we finally had some nice price action on dollar and it just seems to get taken away, but it is what it is right here. Now, based on that and based on the dollar not following through higher here, of course, it also tells us a lot about the indices, for example, about the Forex majors as well. So if we take a look at ES, and I do like NASDAQ quite a lot here because we have this swing low that we are sweeping, then we are continuing higher, targeting, for example, this high, and what we also have is an extra confluence, that daily value gap right there. So that is looking quite good. Let's see what we might want to continue. Beautiful one hour order flow right there. It's looking very nice. So if I was to trade any of the indices, and the one that we might want to look at today, it's NASDAQ right here. Simply finding if we have a 1 hour value gap. 1 hour value gap is a little bit tricky because we are going to have equities open at what is it, 27 minutes, something like that. So this candle will still be created before will close after equities open, meaning that the chances that we create a 1 hour value gap to then sting into it, that's very slim. So let's look at the 15-minute instead. Do we have anything clear on the 15-minute? Not just yet, but if we do want to sting back into the fair value area, that could be quite interesting to continue higher off of as well. I'd rather work with the 15-minute here, just purely from the basis of 1 hour might not create that 1 hour value gap before we actually already continue higher. All right, YM. Let's see. YM to me and DAX in itself is not really interesting. Mainly looking at NASDAQ right there. It's the most interesting one. Now, Australian dollar, EU, whatever it may be, GU as well. It's just not really interesting in my opinion. And New Zealand dollar, US dollar could be quite interesting since we do have a sting into that weekly value gap right there. But if we want to target all these highs, which based on New Zealand dollar, US dollar alone looks quite interesting. But based on the dollar, it's, well, is the dollar ready to continue lower? That's my main question. Based on New Zealand dollar, US dollar alone, again, it's quite interesting to look at longs right here. And I like this one the most for higher prices if we do all of a sudden want to continue higher. Let's look at US dollar, Canadian dollar. Again, this to me is just not interesting. I do still think this is overall a consolidating trend and mainly a consolidation as well in itself. US dollar CHF. Now, this is also why I wanted to wait a little bit on US dollar CHF and not necessarily take the stick entry right there. And that was purely from the fact of, well, if the dollar right here can't really find a clear discount rate and will retrace a little bit, then we will see price action like this right there. So that's why I didn't want to enter just yet right here. The daily value gap, let's see what we want to do. But again, that is not super interesting if the dollar does want to have a very big retracement as well. US dollar JPY also at an all-time high, so not really interesting right here. All right, silver. Silver is stinging into that daily value gap. Let's see what it wants to do with that. In the meantime, again, it's still bigger consolidation. So if we can finally create a big rejection, create a new fair value gap lower, could be quite interesting. Until that time, it's still in a consolidation, and I'm not really interested in doing anything right here. Now, gold was looking quite good with this 4-hour value gap to potentially continue lower off of. But again, that whole idea is also taken away with the dollar doing the opposite thing of what we expected right there. So here, the only thing we can do is simply wait and take a step back. Bitcoin, staying into the daily value gap right there. Ideally, this candle should be a down candle, which is currently not the case, but we still have 10 hours to go. So let's see what we're going to do. Overall, still not interested in Bitcoin. Now, crude oil is quite interesting. Let's see what I want to do, because we sting into the fair value area right there. On the daily, we have a nice rejection. Although, I would argue again that we do have a long wick going against us, which is on the 4-hour, those two weird down candles right there. Now, we have already reached the high, which is a little bit of a shame, but we do have afterwards new 4-hour up candles. So on the 1-hour, we have new 1-hour fair value gaps right there, which was overall quite nice and quite interesting to look at for a potential opportunity as well. But now that we have reached the high right there, I do want to take a step back, see if we want to run the high or sweep the high, and see if we still want to continue higher already, or come back for next week's weekly fair value gap sitting right there, which again, currently I would argue looks more like we already want to continue higher as well. So let's keep an eye on this. Keep an eye on it. Quite difficult price action overall because it is a bigger consolidation right there. Bank Nifty, not that interesting at an all-time high right now. All right, so US dollar CHF right here. I don't see really anything interesting right there, and I still want to wait. Gold, also don't really see anything interesting. Euro Canadian dollar, I am currently out at break even right there. My entry was something like this, I believe, covering the high. I got tagged out at break even right there. So I don't have anything currently on my interest list. So if anyone wants to suggest anything, then please feel free to let me know. And we'll take a look at NASDAQ. NASDAQ does look quite interesting as well. But other than that, I don't really see anything interesting right now. From a filtering process perspective, I do have to mention that as well. Flow trading plan, I assume, and I do think there's enough opportunities out there. Filtering process, I don't really see anything interesting right now. Afternoon from the UK. Love to see it, love to see it. I mean, it's long on NASDAQ since London. Love to see it. Yeah, it's beautiful, to be honest. Beautiful. And it was already quite beautiful, by the way. Dollar was continuing higher and NASDAQ was not showing any fair value gaps lower. So what I mean by that is if we're trying to understand if NASDAQ is going to continue lower whilst the dollar is going to continue higher, then we can just simply compare them and how strong they are essentially in comparison to one another. And what I mean by that is if we look at the dollar, then the dollar yesterday, we had this move higher right there, which had a few 4-hour value gaps right there created. So quite strong price action, we could argue, to continue higher off of. We understand the dollar is inversely correlated to the indices somewhat. Again, it's not as strong correlated as, for example, your US dollar, because you don't have directly the US dollar in the name itself, but it is strongly inversely correlated. Now, right here, then we understand dollar continues higher, NASDAQ should continue lower. But if NASDAQ wants to continue lower right here, then how strong is it doing that whilst dollar is moving higher? Well, at the same moment in time, we have right here this push lower right there. So overall, we could argue that that it's not the same strength in price action because this is struggling to create fair value gaps to continue lower. So that's why the thought process yesterday in the forecast was as well, if we then want to continue higher, then we could still sweep this swing low right there to then continue higher, because even if the dollar just creates a retracement, then NASDAQ will see strong push higher right there because NASDAQ is quite strong in comparison to the dollar, etc. Things like that. So this trade right here in London, that's actually very nice. It's actually very nice. It's beautiful, beautiful. On the 1 hour, it's at least beautiful order flow. Let's see. All right, I took a 1 hour context fair value to context target high on New Zealand dollar, US dollar, and 1 minute ST plus re entry. Could you go over that? Give me some thoughts on it for sure. I imagine it was higher prices. let's see. Where was it? Was it this right here? This right there. And 1 minute ST plus re. Let's see. Let's dive into the lower time frame. We have the 1 minute sharp turn sitting right there. And afterwards we have the re sitting right there as well. Even a little bit higher, of course, with that fair value gap. Yeah, that's overall beautiful. There's nothing weird or wrong with that. Let's see where he took it. Let me open up in the browser as well. There it is. Let's see. There at the top. Okay, yeah, that's very nice. Let me see if there's some resistance, just to see if we can get some accuracy for it as well. On the 1 hour, no. On the 15 minute, do we have anything? 15 minute fair value gaps going against us, but by the time we took an entry, was already sitting right there and right there. So let's see when. No, that's beautiful. It's looking very good. Very good. Very good entry. I like it. I like it. Looks very good. Right there. Yeah. Looks good. I like it. And again, this is from a... I would argue this is from a flow perspective, since we are using the 1 minute as well. Flow / hybrid perspective. Filtering process wise. So the reason why I say flow is it's quite a nice trade. I do like the trade ID overall. The reason why I mentioned that, and for flow, I don't like the entry, or for filtering process, sorry, I'm mixing things up. For filtering process, I do not necessarily like a trade ID right here, but for flow, I do like a trade ID. That's purely from the fact that for flow, similar to indices as well, you're not reliant on long-term view of what price action wants to do. So even a rejection of the 1 hour right there, that's enough. Where you're not necessarily reliant on the dollar knowing that it wants to continue lower at that moment in time, if that makes sense. So from that perspective, I do like flow. I do like the flow trade, 100%. Looks good. Let's see. Did not take it, but it was 4 hour CS entry, use all CHF failed to target the weekly fair value gap, even though it would have been a loss. Let me see. On the 4 hour CS entry, right here, we've covered the fair value gap, arguably right there, targeting the weekly fair value gap. Yeah, it's valid, but it's not as high probability in my opinion. And because there's a few things going on right there, it's the main thing that the main reason as to why I wouldn't take it and why I personally did not take it as well, even though I did see it looked quite good, is because the dollar didn't really have a clear discount rate to continue higher off, if that makes sense. And I don't want to compare them too much when I do take an entry, but I do want to know, hey, the dollar is also ready to continue higher right now, if that makes sense. So if the dollar doesn't really have that, and it's quite tricky, and US dollar CHF is ready to continue higher, then even at the slightest retracement on the dollar that we see, that's going to mess up the trade right there on US dollar CHF, if that makes sense. So that's why it's valid from that perspective if we take into account US dollar CHF alone. But other than that, I don't really like it, if that makes sense. Finishing context theory on the dollar, finishing daily to go to the weekly. Yeah, that could be true. We actually saw that as well on very similar on crude oil, what I was thinking about. But crude oil seems like it's currently again continuing higher. You saw the finishing context right there to then come back to the weekly value gap. Could be quite interesting. On the dollar, it's a little bit of a different situation. It could be true, but I don't really want to see a retracement back into this weekly value gap. It's not necessarily a weekly value gap that I would be interested to trade off of. Now, let's say we start to create bearish order flow on the 4 hour right here. We start to disrespect the fair value area, things like that. And we can confidently say, well, we want to trade towards the weekly value gap. Then it's still a clear target to me. So I will use it as a target, but I won't be using it to trade off of, if that makes sense right there. But yeah, that's true. That's true. It's quite similar for sure. Here in GBCHF, let's see. We have weekly value gap plus daily fair value area. When market retrace in that and form that daily down candle, I take stick entry base on that and set my stop loss at 4 hour candle body high, but today's candle sweep previous candle low and goes up continuously. What is your thoughts on this trade? Well, my thoughts on this trade is overall that I don't necessarily like the rejection compared to what we've been going higher off of. So if we're being picky right here, then let's see. I would have liked another rejection lower. Because this rejection alone, yes, it's quite a convincing rejection in a very high probability PD array. Other than that, is it a very, very extremely high probability PD array? Not necessarily. And we are trading off of a daily fair value area, which is already quite a big retracement that we are making as well. The weekly, we are quite high in that weekly value gap, so it's not the beginning of a weekly value gap right there. So the weekly value gap, we could argue, is already gone, essentially, right there. So at this moment in time, if we do still want to continue lower, I would have liked to see another down candle right there, creating expansion phase or something like that. So this candle alone to me is, I don't necessarily like that. Let's see where the entry overall was on the 4 hour, cover the bodies. That's good. I do like that. I do like that. We can still look to continue lower here as well, right there. Although it's not looking very good, if we are being honest, right there with fair value gaps going against us as well. We can potentially still look to continue lower. Yeah, overall the entry is good. The entry is good. The higher, the entry itself, as in where the entry is located, and the high probability PD array, in that sense, I would say, wow, it's not really that interesting. Not really that interesting. Not as high probability where I would say, well, let's just enter off the first candle already. Can you explain the big ST and the ugly array, how to deal with that? For sure, for sure. Yeah, how do we deal with that? That's a good question, actually. Let me see if we can find an example, some kind of example. Let's see, we had a few on JPY pairs, actually. So the thought process behind a big ST and an ugly re is the following. Essentially, when the ugly re already happens, that's when we don't do anything anymore. But when the ugly ST happens, there are certain steps we need to take in order to still follow through on the big ST. Sorry, I said ugly ST, I believe big ST. So if we take a look at this weekly fair value gap right here, and we go into the 4 hour, or even the 1 hour, doesn't really matter, both have a big sharp turn, then we see right here, we have quite a big sharp turn. And a big sharp turn, we could characterize it as we create multiple fair value gaps out of it before retracing into anything, and then we reach resistance whilst retracing into a fair value gap, for example. So to sum that up, we first of all come into opposing resistance right there, so into the resistance area, and then we create retracement into fair value gaps. Ideally, we should have seen the retracement already somewhat here earlier on to then continue higher. So that creates quite a big sharp turn. And when we have a big sharp turn, the thought process is quite important, because if we take a look at this from an intention perspective, as in a big sharp turn is created because we assume that we have quite a big intention to already continue higher right there. So if we have a big intention, and then we shouldn't really create a big retracement, right? So here we create this sting into that fair value gap. We should ideally already continue higher off of that. And then once we get price action like this is already the ugly re. So whatever happens afterwards is just, that's not nice price action. So now we are not necessarily dealing with a re, we are just dealing with a consolidation. So how can we trade that consolidation? Is we're waiting for, again, runs above highs, essentially. But in the meantime, I would like to wait. But the bigger the ST, and if you are entering off of, if you're entering off an ST alone, then you shouldn't really worry about it, because it's not going to change anything really. If it's mainly about if you are entering off a re, and if you're entering off a re, then it's not really a good area to look for an entry. So I would just ignore the entry completely, if that makes sense. How do you find this trade? Let's see, what are we dealing with? 4 hour fair value gap right there. Oh, we have the 4 hour value gap, then it's the 15 minutes right there. Yeah, in general, I wouldn't, it's not a bad trade in my opinion. It's not a bad trade. And especially because you also have an earlier chance to go break even. It's not a bad trade. For sure. That's all right. That's all right. For sure. That's worth taking. Let's put it that way. Because the chance that you might go break even right there are increased. So yeah, that's worth taking. Did I say that? It's not the bedoeling. Oh, yeah. I'm not sure if I said that. Could be, could be. Sometimes I do tend to mix them a little bit. I'm not sure. What do you think about Euro Australian dollar stick entry on the daily rejection off of daily fair value gap? My thought, two candle rejection, swing low, weekly swing low on the daily failed, daily fair value gap overlapping. Let's see. Yeah, I also saw this. Actually, and I do quite. Overall, the higher time frame is quite alright. I say it's alright because I do not think it's the highest probability, but it's alright. So if we take a look at this, then we have a beautiful fair value area. Beautiful. We even sting into the nested fair value area right there. So all these things is, yeah, it's essentially beautiful. The only thing that we do not have, and I'm not sure where your entry was, if it was on this candle or this candle. The only thing that we have right there is quite a big rejection, continuing higher again. So I do not necessarily like that. But other than that, it's quite interesting. It's quite good. And I do like it also from the fact that that it's really the last line of defense. As in, if we're not going to respect this to continue lower right there, then we're most likely just going to continue higher and create or target some kind of liquidity. So in that sense, we have a lot of probabilities going for us that we at least get a rejection lower. So if we at least get a rejection, then we can at least go break even. And if we can at least go break even, then it's worth taking because we can remove the risk on the trade. So yeah, I do quite like it. I don't know why, but psychological for me, break even hurts more than a plain loss. Any thoughts? Or I have no idea. To be honest, that's I don't really have that in all honesty, unless it's a break even, and it's a break even that turns into a winner. Then it does hurt more to me than a plain loss. So it could be that you have some kind of data supporting the idea that break evens are actually not good for you, and you might know that as well. But other than that, I personally do tend to like break evens in comparison to a loss, if that makes sense. And Q reacting off of 15-minute fair value area. Let's see. What are we doing? 15 minutes. There it is. All right, let's see what we want to do right here. I'll mainly wait for equities open to see it. It was on the first rejection candle. All right, it's perfect. Perfect. Nice. Nice. Break even that turns into wins indeed. Okay. Break even that turns into wins. Yeah, in that case, what we can do, because then I can relay. Yeah, for sure. In that case, if you do have quite a few trades in your trades taken as well, that you notice, hey, those break evens, they turn into wins, then be more loose. You might want to find a balance in that. So the way it usually starts is, I advise you can go break even quite early, protect that capital, etc. But you don't necessarily have the experience just yet to know exactly when you can go break even and what is quite early, because that is quite a subjective thing, oftentimes, break even. So then I would advise remove the break even completely, the rule completely. And so then we're at two extremes, right? We're going break even very early, and then afterwards, all of a sudden, we don't go break even at all. So we're at two extremes. Then we need to find that balance in between those two extremes, where with experience, we can see, hey, I do take a loss here, I take a loss here, for example. All right, now I can pinpoint a little bit better where I can go break even, if that makes sense. So in that case, I would advise, how is it for you if you just don't take break evens at all? And of course, that's also going to translate over to, you might take some losses where you could have easily gone break even 100%, but that's worth taking. That's worth it essentially in the long term, because you're going to learn from that a lot. Can you explain what occurred yesterday during the last 2-3 minutes of market close? I didn't see any pre-market for it to drop so massively. Market close. Let me see. What exact time are you referring to? Is it the exact? This one right here, the bond close, I imagine, right there. Let me see what happened right there. Well, not necessarily anything. I can just see a sweep of liquidity right there. We know bond close is quite active. Other than that, I don't really see any reason, to be honest. I don't see a specific reason on why we continue lower. I just see a bigger consolidation right there. Which usually the last hour tends to be more volatile. So that's why we do get some volatility right there. But other than that, the best I could give you is a swing high right there that we're sweeping to then continue lower. If that makes sense. I don't know. Oh, I mentioned that already. Biggest D is considered as fake top / bottom. Not necessarily. Not necessarily. We could argue somewhat, yes, but I wouldn't associate it with that. GU today. Let me see. What are we doing? 4-hour fair value area right there. Entry was sitting right there. Okay. 15 minutes ST, 4-hour fair value area. Let's see. One thing that I would like to know right here is how far are we already retracing? Because the thing that I don't like is that we have this fair value area with the fair value gap, which in itself looks very good. But the first thing that I do notice as well is that we are struggling below this low. So the fair value area is already at the bodies and not the candle. So there's no fair value gap overlapping with the exact candle. So that would already require me to have more confirmation already, since it's not a perfect situation. So that would already require more confirmation, in my opinion, than just a 15-minute sharp turn. Potentially another rejection, potentially another fair value gap, as long as it's more confirmation in that sense. And let me actually see, because right here, if we take that into account, that's all right. That's all right. Yeah, that would be mainly it for me. More confirmation, because we are not. It's very similar to the dollar, just inversed, of course, because it is GU as well. It's what happened here as well. Every single time. We have this low that we do not necessarily close below very aggressively. We do not have a good confirmation right there that we are running that low. Then we get a very big and deep retracement into those fair value gaps. Very similar to this scenario that we have right here, where the entry was. And we constantly get those big retracements right there. So when we get bigger retracements and we have a sign that we are not very comfortable below that low right there, then I would always want more confirmation. So that's mainly it. If that makes sense. Let's see, would you have moved to break even after the 4-hour SIBI? Let's see, what are we doing? We have Euro Canadian dollar on the 1 hour. We have 4-hour right there after the 4-hour SIBI. So I believe that's at the low right there. Let me see. Let's take a look. Euro Canadian dollar. And the entry was, it was right there. I believe it was a daily close as well. Very similar. Turning high, turning low. Not sure if this was exactly 4-hour SIBI right there. And the 4-hour SIBI is right there. Yeah, that's perfect. 100%. I would argue even when we just have the expansion phase, because the expansion phase candle. So, I mean, this candle right there. Because this expansion phase right here reaches below the main context right there. So if we are going to sweep that, then we don't necessarily need a fair value gap lower to tell us if we need to go break even at that moment in time. So I would argue even when we reach below that low in the expansion phase right there. Because either we're going to create a SIBI to continue lower, or if we are very aggressively sweeping that low, something like this will happen, right? So yeah, that's perfect. Let's take a quick look. So we have equities open at NASDAQ right here. What are we doing? All right, nice rejection currently. It's quite a difficult situation to get involved. And what I mean by that, I can't really pinpoint a clear discount rate right here that we want to continue higher off of. Now on the 15-minute, I could see if this wants to be an expansion phase candle right there, for example, an entry on the expansion phase candle itself. But currently, I really need to go into the 5-minute, which I don't necessarily want to do because we are also not really dealing with anything higher time from context wise. So it's mainly waiting for the 50-minute, seeing what we want to do. I do say that, but of course the 50-minute fair value area in itself right there, that in itself is already an entry, but I mean right now speaking, right here at this moment in time. Might have missed it in spring enrollment. What is SIBI, please? I didn't touch it in spring enrollment, but SIBI is essentially what is it again? It's a sell side inefficiency, buy side imbalance, I believe, and or it's the other way around. Anyway, it's a bearish fair value gap essentially. So a SIBI is a bearish fair value gap. Other way, okay. Sell side imbalance, yeah, that's the one. Sell side imbalance, buy side inefficiency. So it's a bearish fair value gap, and a BISI is then a buy side imbalance, sell side inefficiency, and it's a bullish fair value gap. It's essentially an easy way to say if we have a bearish or a bullish fair value gap. So it's a SIBI, bearish fair value gap, BISI, bullish fair value gap. Also wanted to ask, I will see a lot of scenarios where, for example, you have price coming off of a 1 hour bullish order flow and takes out 4 hour swing high / low. Would you would like to know what you would demand to confirm a run on liquidity? A new 1 hour value gap, 4 hour value gap, or 4 hour 2 candle rejection, failure, etc. Let me get the scenario straight. Let me see. I will see a lot of scenarios where, for example, you have price coming off of 1 hour bullish order flow. It takes out bullish order flow, takes out a swing high, 4 hour swing high. Okay. Like to know what you would demand to confirm. Okay, in this case, what I would like to have is just a 1 hour, a new 1 hour fair value gap, ideally overlapping with the swing high that we took. So the swing high that we take on the 4 hour most likely is going to turn into a fair value area. So if we can have that 1 hour fair value gap overlapping with the swing high, then for me that's a run. A 4 hour 2 candle rejection failure, that's very similar to a 1 hour fair value gap essentially, because it's going to happen most likely in the same set right there. So 4 hour 2 candle rejection failure is good, or a 1 hour value gap. 4 hour value gap, yes, eventually, but starts with a 1 hour value gap for me. That's all right. How many trades do you take usually per week, per month? Because I see myself overtrading sometimes and I don't know how to look at this. Would you suggest to do something else besides this? I always would suggest overtrading comes from a few things. I think it's also it's helpful to do something besides trading. And what I mean by that is something that you can put time into where it does pay off. As in trading throughout the day, you can stare at a chart for 8 hours, but it's not necessarily going to pay off or do any good for you. If anything, it's going to drain you mentally a lot. So something else where you could put 8 hours a day into, you can actually feel like, oh, I was very productive today, you know? So I would always advise that because it also helps from you overtrading. And next to that, the amount of trades. So this is June for me thus far, which is most likely this is going to be June. I'm not sure how many days we have. A few more days, so this is most likely going to be June for me. That's a trade a week, essentially on average. We could argue right there. There was 2 trades in 1 week, I believe, right there. But that's on average a trade a week right there. But again, that's also different because I trade stick entry, mainly higher time frame as well. I require a lot of high probability conditions right here. So it's a whole different scenario. If you are trading, for example, Delirium, it's also going to be a little bit different. If you are trading flow, then you're going to take a lot more trades than what I'm doing right here. So it depends. Depends on what kind of trading plan you also have. If we're talking about higher time frame filtering process, then I think a trade a week is the aim. That concludes June. Beautiful. Which one is that? That's NASDAQ. Yeah, beautiful, beautiful. Absolutely beautiful. Yeah, beautiful order flow, to be honest, right here on NASDAQ. Absolutely beautiful right there. It's just taking off right now, which, again, if you didn't manage to get involved right here, then I also wouldn't rush to take on a new trade right here, because we are rushing into a daily fair value gap right there. We have reached a swing high right there, which will turn into a fair value area. So all those things lead to, we might consolidate right here until we get 4-hour value gaps with the fair value area again of the daily value gap right there, to then potentially continue higher. But then we have to still have the daily fair value gap as well as resistance. So take it easy right there. This is an area where we might consolidate right here for a little bit on the indices. Again, nothing guaranteed, but look for the signs. Look for the signs. It's been a while since I saw a clean move. Yeah, I was about to say, this is really, I don't know, the clean move here is really a filtering process move, in my opinion. This is really a really interesting move. It's really nice. Read a book and set alerts. Yeah, that's also a good one. Also a very good one. I'm reading a really interesting book, actually, Innovator's Dilemma. If anyone wants to read it, it's really interesting. I think it applies to a lot of the prop firm industry as well. Super interesting book. Quite difficult, but it's very interesting. Nothing to do with trading or anything, but it's just an interesting book. It's The Innovator's Dilemma. The Innovator's Dilemma. And if you then put it from in that perspective, essentially what they're doing is they're taking the disk drive industry for how businesses work, essentially. And it could be applied to trading even, to traders in general. And for example, hedge funds, institutions, etc. Also prop firms, it's applied, and you can literally see it happen right now in prop firms, which is really interesting. And essentially means you have the disk drive industry. Disk drive industry is something where the fastest technology happens and businesses go out of business very fast, etc. And how new businesses can disrupt bigger businesses already leading. For example, if we were to disrupt what FTMO is currently doing, which could happen if you read the book. It's very interesting, very interesting. If you want to more learn about Sibi and Bissy, I can recommend you A to Z Guide episode 7. Yeah. 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 It's very funny, actually, if you compare that video to the videos I make currently. I mean, that was, I believe, just a video just about Sibi and Bissy. It's quite funny. Let's see. Managed to get involved. Beautiful, Joey. That's absolutely beautiful. Yeah, that's beautiful. Makes me jealous of futures again. Star Wars books for me at the moment. Love it, love it. Love to see it. Nice. How would you want to get involved in NQ? Couldn't really find a mechanical flow trade. No. Same. The only real thing that I could see is the fair value area right here. But that's after the fact. I also did not mention it before. That's now after the fact. Ideally, I also would have liked to see a little bit more confirmation off of that, since we're not working with 1 hour context anymore, etc. Things like that. But other than that, mechanically speaking, no. I don't really see yeah, on the 1 minute right here, after we get a sharp turn, etc. Things like that. So we could argue 50 minutes fair value area right there, 1 minute sharp turn. So entry like that. Yes, I could see that right there. But that's again me speaking from hindsight right now. And not from at that moment in time. Your book selection is not top notch. Can you recommend all of your favorite? Let me see. Thank you, by the way. Thank you. Well, Reality Transurfing is a nice one. I also read The Innovator's Dilemma right now. Then I have a few Hyper Focus by Chris Bailey. It's also nice. The Winner Effect. Then I have Profit First, actually. That's for business, for trading, whatever it may be as well. And then I have John Wooden on leadership. And that's about it. That's the current that I have in my library on my phone. Whenever I pick up my phone, I read a book. I have a few more books as well, just physical, but don't really have them here, to be honest, right now. The Ascent of Money would recommend talks about how money insures debt, stock market, bonds, housing credits. So it's very interesting, very interesting. I like that. For me, there was a 1 hour context in ES, but before equities open. 1 hour, yeah, for sure, 100%. Similar on Nasdaq. Let's look at the ES right there. Yeah, exactly, right there. Yeah, very true. And again, if we're talking about a 1 hour context, 1 hour trade right there, I wouldn't really mind entering like that before equities open. But if we're going to the lower time frame, 5 minutes, 1 minute, then bleh, I wouldn't necessarily like that. Inside daily value gap in Nasdaq, can expect some rejection. For sure, for sure. Yeah, this is a tricky area right there. Tricky area. So here I would also like to wait. The silver does catch my eye a little bit. As in, it could be quite interesting to see what it wants to do right here. $15-minute, failing to follow through, creating a 15-minute sharp turn potentially. That's quite interesting. Let's see. We will create most likely a 1 hour for value going against it as well. So we might see some rejection. Ideally, my entry I would have liked to be afterwards right there. All right. I think that sums up crude oil as well for the week right here. The big rejection that we are currently seeing with that high. And that again takes away all interest right now. Where it still seems, right, unless we start to again create new value gaps going higher right there, start to create expansion phase candles, I do believe we can already continue higher. In the meantime, it's if we stay in this consolidation, so stay in this range right here, then for me, it looks like we do want to potentially have a sting into the weekly value gap. Can we say that in ES daily, this is a fake top, applying your recent course? Let me see. On the daily. Yeah, for sure. That's a good one. Yeah, we do. So this is a fake top right there. So even if we do potentially want to continue lower, then this high right there is most likely what is going to cause it right there. Yeah, it's perfect. Sort of that's actually very interesting. It's sort of a fractal fake top right there. On the daily, yes. Then we still have to, of course, combine it with the understanding, all right, do we actually still want to continue higher right here with 4 hour value gaps, etc., things like that, order flow. But yeah, that does look very good. Looks very good. So this high is quite important right there. A bigger rejection of the daily value gap. Again, I wouldn't really be interested in shorts or looking at anything like that. So it's mainly waiting. Dollar still continuing lower. All right. I saw, which one was it? Oh, it's the same one. Never mind. Recently observed when Nasdaq has resistance and ES does not. ES consolidates for no reason. Is it as a characteristic of indices? Yes. For sure. So essentially what happens is, it's very funny because they're always holding hands. The indices are always like holding hands. They're if one can't go that way, then the other one also can't go that way. So if Nasdaq is running into some resistance, and that's just because how closely they are correlated a lot. So if Nasdaq is running into resistance, then the other indices are also going to have that. They are not necessarily going to run into resistance, but they're also going to all of a sudden have some type of consolidation or rejection. Especially Nasdaq and ES. I would argue those are correlated a lot, very much correlated. So yes, 100%. So if you're trading indices, then those type of things, those are quite interesting to take into account. I love so much how Spring Enrollment is like a preview book of the market unfolding. Thank you so much. Love that. Thank you, my friend. Thank you. All right, team. I am currently going to end it here.